are you breaking this trading rule? Well, about 70 to 80% of traders around the world do this. And they come up with all sorts of justifications of why they break this trading rule. They think that a lot of the time that the market is conspired against them, so a conspiracy, and so that justifies this trading rule, so or this rule break, should I say, or that they just don't do this one thing. And then they think that if they don't do this one thing, that they can be right more often. They can be right more often, and that is true. They will be right more often if they don't break this trading rule. This trading rule is using stop losses. So yes, if you enter a market here, for example, and you don't use a stop loss, even though price went and you're short, and price went higher, but you didn't use a stop, ultimately, yeah, it came back. So as long as you can weather the storm, then okay, yeah, it's fine. I was right, so to speak. The difficulty is when you sell like down here, and then you get trapped in a much bigger move, then it comes back down, and you start selling some more, perhaps, even if you manage to hold on there, and then it goes all the way higher, and that's where people get their accounts blown up. So yes, you can get away with not using stop losses, and you'll hear people say, "Yo, I just hedge. I just hedge. Oh, if it starts going against me, I just hedge." Yeah, and there's a reason why the regulators in the UK and Europe are starting to, or they've started to advise brokers not to allow retail traders to hedge. Let me explain. So you've got a retail trader who goes long here, so they buy here. The market comes down, so they're not using a stop, and at some point they'll hit a pain barrier where they'll say, "Oh well, I'll just hedge now," and they sell down here, and then the market starts going back up, so they're getting a right old tiz. So they end up doing what? I don't know, do I add to my sell or do I cut my long? And they're getting a right old mess. So maybe they cut their sell, then it rolls back over, so they've taken a loss on their sell, and they're now still on the original long, then they sell again, and it just becomes a mess. So a lot of brokers now are not allowing retail traders to hedge on the same instrument. You can't be long and short at the same time. Why? Because the sheer amount of people that do that stuff who lose money. So this ultimately comes back down to the same old argument, except that you're going to need to be wrong a given amount of time. Trust in the numbers. You can have a success rate if you're using a stop loss of, for argument's sake, 50% with a 1 to 1.5 risk reward ratio, and you're making money, let alone 1 to 2 or whatever. So trust in the numbers in that regards. It's all very well not using stops and getting away with it for a while, but at some point it 100% will always come back and bite you, and that's why 70 to 80% of people around the world, well, it's probably more like 80 to 90, but of those 80 to 90, if we say 70% to 80%, and I get these numbers from brokers, don't use stop losses. Yes, that means they get away with it for a while, but ultimately there's always going to be a run in a market where you've bought up here and it just goes and goes and goes against you, and you may well be adding in and you end up blowing up, and that is the reality of what goes on around the world. So don't listen to people who advise you not to use stop losses. In my view, they are idiots. And there you go. That's the end of today's video. Have a lovely weekend. I'll see you next week.